What's up traders, welcome to Failure to Displace. In this video we're going to take a look at this morning's London session on EURUSD, where we had this really nice 5.4 trade setup. In this video I'm going to explain a little bit more about the 15-minute cycles and the reason I pay so much attention to the open and close of 15-minute candles. So with that said, let's jump into the analysis now and see how this trade presented itself. Before we jump into the full analysis, I do want to offer a full disclaimer. I didn't trade this, so I'm looking at this in hindsight. We have Euro news or German news all day today, which is red folder news. I'm not sure how this is going to impact price. I've made good profits recently, so I'm just cautious about digging into those profits, going back into drawdown when I've just managed to have such a good month. So I'm not trading this. However, the setup was absolutely perfect. We did have also Spanish flash CPI due at 4 AM as well. Our entry did occur before this. So whether we trade during all day red folder news or not, I'm undecided at the moment. The entry that we are taking is before the Spanish flash CPI, however. And so with that said, let's jump into the main charts. Before we jump into the analysis, I just want to highlight that we are currently in daylight savings time. So if you're trading in the UK like me, we've just dropped to UTC -4. So double check that your charts are set to New York time now. This was previously UTC -5 last week. Coming into the new week because of daylight savings, we're UTC -4. So we're going to have a couple of weeks period before America goes into daylight savings as well, where we are -4 as opposed to 5. So just double check that your charts are set to New York in TradingView. Inside our charts, we can see we're using our session liquidity tracker indicator, which is showing us untapped levels of liquidity in these extended green lines. Red lines indicate that the liquidity has been tapped. We've also got a fair value gap indicator here and a sessions indicator showing us our timing windows. So links to all of the indicators that I'm using are down in the description box below, and I've also put a quick video there with all of the settings. So if you want to replicate my charts, all details are down there. So the first thing that should be standing out to us is that we put in a low on Thursday, and then Friday was quite an explosive move in the New York AM session, and then we've consolidated since then. So after these large moves, we do expect a little bit of consolidation, which we seem to be going through at the moment. So what I'm interested in, first of all, because of this large range day, I want to see where premium and discount is. So premium is anything above 50% of the range, which is above this green line here. Anything below 50% of the range is in a discount. If we're going to be looking for shorts to target the lows, which where we've got relative equal lows here from the New York AM session, we want to first see a move into a premium potentially, where we've got this 15-minute fair value gap, where we can then target lower. So let's just highlight now our fair value gaps. So there's our first fair value gap. And we can see going into that fair value gap that we have relative equal highs as well. So we've got some buy side liquidity going into an inefficiency here. So this is the high of the New York PM session going into that fair value gap, so that's quite interesting. And then into the low, we've also got Asia low at the moment going into the top of this 15-minute fair value gap. So this is a bullish fair value gap. We can see overlapping between the bullish fair value gap, we also have a bearish fair value gap that was filled in. So where these two overlap, this is our balanced price range. Essentially at the moment, this is a really inefficient area of price delivery because we didn't really fill the balanced price range on the bearish side or the bullish side. So when price comes back down, to balance this price range, it can be a very reactive area. So we could see a strong reaction if we do come into this BPR zone. And obviously this BPR zone is sitting just below Asia low liquidity. So this would be a good draw on liquidity as well. Coming back to rebalance this and then potentially hit these relative equal lows for EURUSD if this doesn't act as support. Very tight range in Asia. So as we mentioned, lots of consolidation. So what we're essentially going to be doing now is just looking at price action from 2 AM, open of the Euro window, see if we are going to sweep either Asia high or Asia low, which is going to be our first points of interest because there's really nothing inside this range that we want to be trying to deal. Let's jump onto the 5-minute time frame, start scrolling forward now. One thing that we should mention is these large orange boxes that we've got that we're seeing with the dotted lines in the middle. These are new week opening gaps. So we have a previous new week opening gap above us, so a rather large one. It's been traded through quite a few times. However, there's this week's new week opening gap here. So this lower orange area, and it's maybe quite difficult to see because it's overlapping with the larger one, but this lower box here is actually this week's new week opening gap, which Asia has attempted to fill but not actually filled fully. We didn't close through it. So London may come back as a draw on liquidity to rebalance the new week opening gap, sweeping Asia high looking at this, which is interesting. And then obviously into our premium level where potentially a short position becomes valid. We can see price looking very bullish at the start of the London session. We've left a bullish fair value gap. Price has tapped it and is moving away. We have a bearish leftover fair value gap here. So let's see if we trade through that or trade through this. Whichever one of those fails gives us an indication of where price may be going. Really strong move. 230, big bearish engulfment candle. So again, this is why I'm very hesitant trading when there's euro news on. You can get large candles like this out of nowhere, depending on what they're discussing in the all-day session. A very, very large bearish move. It's taken all of this liquidity low now. So we kind of built up this box of liquidity. We've swept that. We're now coming again. I'm not interested in getting involved inside this Asia range, so I'm not going to get sucked into a trade. I'm wanting to see a sweep of session liquidity. And also, if I'm going to take a short, I want to be in a premium. If I want to take a long, I want to be in a discount. And I want to be lower down. I want to have swept some liquidity. So I'm not going to take a long at this point. Okay, so we're taking another run at the high now. So quite a lot of manipulation there. And we've just swept Asia high. So I'm going to drop onto the 1 minute time frame now, because we've taken Asia high. And I'm going to start monitoring for our entry model. So we can see as we drop to the 1 minute, we're only showing one new week opening gap, which is this week's new week opening gap. We've just filled it. So premium discount, so we are still in a discount at the moment. Smart money will probably be more likely to sell in a premium, buy in a discount. So let's just see if we can whip up into this premium area. Gap down, up. We've taken liquidity. Let's start looking at this now. And we are into a premium. So we're looking for the last up closed candle that created a swing high and then fails for our breaker block, which at the moment is this. So at the moment, this would be acting as an order block. This created a swing low, so it led to a swing low, and then we've gone to a swing high. So at the moment, this is an order block. In an upwards trend, you would expect these order blocks, so these opposing coloured candles, to support price for a move higher. We've got a fair value gap, we've got a volume imbalance in this area as well. So if we start seeing these fail, and we see this fail, that'd be 3 PD arrays that fail, which can potentially show that we're moving from a buy side program to sell side. So let's just keep an eye on this. So specifically looking closely at this point, this order block. So immediately we've moved in, so it's the start of 3 AM for starters. So we've got a new hourly candle opening. So this is our silver bullet hour. We've closed through this bullish fair value gap and this volume imbalance. Order block still holding price at the moment. So we've got a balanced price range here on the 1 minute. So we had a bullish fair value gap followed by a bearish fair value gap where the two overlap. Is a balanced price range. Let's just make sure that that is the right size because it's only a very small one. We've not closed through the order block yet, so I've not got the confirmation that I want as far as an order block goes. Time 3:04, so we're really going to be looking. We've swept this liquidity, gone into a premium. Big move at the open of the 3 AM candle. There's been no entry at 3 AM and we're outside the open now. So going back to my 15-minute cycles that I like to trade. I like to try and get entries, or I find Confluence if I get triggered into a position 3 minutes either side of the open of a new 15-minute candle. So this would be from 57 through to 303. So if I was get triggered in at that time, it's extra Confluence. When you go back through your data, you'll often see that session highs and lows and daily highs and lows are put in at the very open of a 15-minute candle. So this is what really triggers me to look at these key points in time. Well, if we're putting highs in, like we are here, at the start of the 15-minute candle, so this is the start of 3 AM, then it makes it more of a significant high in my opinion. So we are looking then, potentially, this is the 3 AM. We've not had a trigger at 3 AM, but our thoughts will be, right, is there going to be anything at 3:15? So where's 3:15? So 3:15's there. So we've had half an hour up. This candle, 2:30, we put in a low, we've had half an hour coming up. We could potentially get a bit of 15 minutes consolidation and then get the reversal on. We've closed through this order block. We are respecting this bullish fair value gap at the moment. This order block is potentially a breaker block here. But again, we're in the middle of a 15-minute cycle. I've only got the BPR above me as resistance. We're still inside these bullish candles at the moment, so it'd be nice to see a break of these for additional Confluence that will go in lower. That would give us a breaker structure as well. So an aggressive move coming down. So we are disrespecting bullish fair value gaps, displacing lower. We have taken that low, which is nice to see. We're coming in 311. So 313. So now this is where I'm getting keen on this. So we're coming into this window where I will take an entry. We're seeing we're breaking lower. We've broken structure here. We've left fair value gaps. We've left a breaker block. We've left a balanced price range above us. So I've got to add up the confluences. 3 or more confluences for a short is a high probability trade in my opinion. So we've swept liquidity, we've gone into a premium and we are now rejecting from that premium level. For stop loss placement, I will have a breaker block. I've got this order block now because we've traded through it. So these bullish candles now act as a bearish order block. I've got a bearish order block, I've got a breaker block, I've got balanced price range as well. So those are my 3 confluences or 3 levels of resistance that price would need to break through for my trade to be wrong. So that makes it high probability. If we trade through those, we're likely going higher. So that's enough confluence for me to look at taking a trade. And then we are coming up to trigger an entry into the open of the new 15-minute candle. So this is the extra confluence that I would look for. So the short position will be a tap on the bottom of the breaker block. My stop loss is going to have to cover all 3 of these PD arrays, which means I need to have a stop loss above this order block because this is the highest of the 3 PD arrays. My entry would be on the breaker block. So you'll notice there's no bearish fair value gap inside the breaker block. So this isn't the unicorn entry, but we do have 3 PD arrays. So I would still view this as a valid entry. We've swept Asia high, which means your target is going to be Asia low. And we've identified that we've got a 15-minute balanced price range here that's likely to get taken out. So you could either take profits at the Asia low or expect the balanced price range to get filled. Usually we would expect a wick through to fill a balanced price range. So that would fully rebalance this area before price decides what it's going to do. And obviously we've filled this new week opening gap as well. There's lots of things stacking up for why we could be going short at this point. 314. 315, so we've not quite got tagged in at 315. It's just missed the bottom of the breaker block. We're pushing higher. We've obviously got a bearish fair value gap here, which is being filled, but then we are respected. So we are tagged in at 316. So now we want to see a move away from this area, hitting our take profits. The breaker block's held price really nicely. We've not moved aggressively away yet. Okay, so another move, filled the breaker fully. We've still got our BPR above us, remember. So price may wick up to fill our BPR, rebalance that area before displacing lower. I'm still not panicking at the moment, but we've not had an explosive move here. And now price rockets away. So this move is happening halfway through the 15-minute candle. So I'm going to take a second now just to explain what I'm seeing at this point. So I'm looking for entries at the open of 15-minute candles, which was this trigger point here, but we've not had a move. But you can see often halfway through a 15-minute candle, the volume may come in. I view this very similar to ICT's power of 3. So ICT's power of 3 is where we have an accumulation phase. So you can see we've got relative equal lows here that we'll put in at the start of the candle. 315, we'll come down, we'll put in another relative equal low. So we've got a draw on the low here on the 1 minute, and then we've put in this high. This here is our accumulation phase. So ICT's power of 3 is accumulation. So we have accumulated orders in this area. Let's change the color to purple. So this could be our accumulation phase. We then get a manipulation phase. So the manipulation phase is taking traders in the wrong direction, which is this little sweep of liquidity here. We have a couple of candles where we just break out, take traders in the wrong direction. So we'll do that in red. Take traders in the wrong direction before then accelerating into the right direction. So we've built this accumulation. We've built a very small range. Halfway through the candle, we're going to put in a top wick, which is here. So we do a failure to displace. We break out at the top of the range, and then we accelerate in the right direction, basically 8 minutes onwards, getting us away from this range. This is kind of the power of 3, how candles are formed. What am I doing? Do that in green. Accumulation, manipulation, and then distribution coming away. And you're looking for distribution to occur halfway through the candle. So at 23, which is 8 minutes, candle's 15, so this is exactly halfway through. We get the bearish candle to pull us away, quickly moving us out of this area. So you may see me refer to halfway through a 15-minute candle as well as an entry in the 15-minute candle. So we were triggered in on this one at exactly 316. We saw some accumulation, so again, there's no need to panic. Halfway through the candle, we get a wick taking out the high, putting in a top wick essentially on the 15-minute candle, filling the breaker block, and then we get our distribution phase taking us down to our target levels. Obviously, price accelerates away aggressively. Again, monitoring the 15-minute cycles, so we've got 330 coming up. Put in a wick at 330, price continues. We're down into the BPR area now, so this would be obviously a really good take profit one. Would have been at the top of the BPR here, which you would have got with zero stress, really fast move, and then holding potentially for the BPR to get filled. So again, note the timing cycles. So 45, a little bit of consolidation going on, and then coming into the 4 AM candle. Strong move, so we put in relative equal highs, relative equal lows at this point. You saw the new candles opening up, 1, 2, 3, big engulfment straight down. This is news driven because we did have the Spanish flash CPI at 4 AM. So our entry was well before the CPI news, so we were well in profit, and then that news driver just filled the BPR for a 5.6 hour trade. So really nice trade. As I mentioned, looking at the 15-minute cycles as extra Confluence, you will often find the highs put in, so 302, and the lows put in, which is at 4, are put in at the start of a 15-minute candle, so it's extra Confluence. If you're taking an entry at the open of a 15-minute candle, it's often a good sign that you're not going to be sat in any drawdown because those trigger points volume is often injected at the open of 15-minute candles. We can see in some instances, as we mentioned here, halfway through the candle could be the turning point. If you look at the candle in ICT's power of 3, accumulation, manipulation, distribution, it can give you additional confidence that the trade is still valid and still okay. So that is the 5.6 trade from this morning's session. If you were to be trading this and not worried about the all-day red folder news through Germany. Let's just carry on here. So price puts in a low. It's filled that 15-minute fair value gap that we highlighted. So we have filled that in full. So as well as rebalancing the BPR, we come down and we fill the actual 15-minute fair value gap. It's obviously done at exactly 4 AM, so we've had basically an hour move down to a level. You would expect some consolidation after a strong move, usually 30 to 45 minutes before any kind of reversal. So we've got 15 coming into 4:30. So see if there's any move just to confirm our 15-minute cycle thesis. Put some relative equal lows in at the bottom of here. Another low, so 1, 2, 3 pushes. Just swept that low there at 4:30. So there you go. We've got half an hour consolidation. The open of a new 15-minute candle, 4:30. And then we can see price starts its move again. Filling in, so potentially now into a buy delivery system as opposed to the sell side that we've taken there. But again, it all happens at the open of 15-minute candles. So this is why I'm constantly watching them, just to help me segment up my trading window and observing when potentially the highs and the lows are going to be put in, because they often occur at the open of a 15-minute candle. So I hope you found that useful. Really nice trading session, beautiful trade, really nice entry. Not the exact model that we have because we didn't have the fair value gap inside the breaker block, but we did have a bearish fair value gap and the trigger was at the open of a 15-minute candle, and we still had our 3 PD arrays as levels of resistance to accurately place our stop loss. So if you found that useful, please leave the video a thumbs up. If you've got any questions, leave them down in the comments section, and if you're enjoying the content and want to see more videos like this, then consider subscribing. Drop in analysis like this every single day. It'd be great to have you on board. Thanks for watching. I'll see you again in the next video.